Classical Accountancy Numerical Problem Solutions. Presented by edxit.com. In this video, we are going to provide Accounting for Partnership Basic Concepts, Guarantee of Profit to the Partners Solutions, Problem 36 Solution. The problem statement is as follows. Amit, Babita and Sona form a partnership firm, sharing profits in the ratio of 3:2:1, subject to the following. 1. Sona's share in the profits guaranteed to be not less than 15,000 rupees in any year. 2. Babita gave guarantee to the effect that gross fee earned by her for the firm shall be equal to her average gross fee of the preceding 5 years when she was carrying on profession alone, which is 25,000 rupees. The net profit for the year ended March 31st, 2000 XA is 75,000 rupees. The gross fee earned by Babita for the firm was 16,000 rupees. You are required to prepare Profit and Loss Appropriation Account. So, as per the problem, we have to prepare the Profit and Loss Appropriation Account. If you carefully analyze the problem, we notice that this problem is just about the distribution of the profits, nothing else. Of course, there are other considerations, but finally it is about the distribution of the profits. It is given in the problem that the net profit for the year 2000 XA is amounted to 75,000 rupees. Now, we know that the net profit is nothing but a credit balance in the Profit and Loss account. For distributing this net profit, we prepare the Profit and Loss Appropriation Account. So, we need to transfer this net profit on the credit side of the Profit and Loss Appropriation Account. Also, as we are transferring this net profit from the Profit and Loss account, we need to debit the Profit and Loss account. Now, the preparation of the Profit and Loss account is not in the scope of this problem. So, let's leave out the Profit and Loss account related debit entry and let's directly post the Profit and Loss Appropriation Account related credit entry into the Profit and Loss Appropriation Account. But first, let's prepare the format of the Profit and Loss Appropriation Account as it is not yet prepared. Let's first write the title as Profit and Loss Appropriation Account. Let's then write the headers DR and CR to designate the debit and credit sides respectively. Let's now have the individual columns for particulars and amount in rupees on the debit side. Let us have the same columns on the credit side also. Let us then write by Profit and Loss account into the particulars column on the credit side. This indicates that the net profit is transferred from the Profit and Loss account to the Profit and Loss Appropriation account. Let us then write the transferred net profit amount of 75,000 rupees into the amount column. With that, we have completed the credit entry related to the transfer of the net profit amount from the Profit and Loss account into the Profit and Loss Appropriation account. Now, if we revisit the problem, we see that the partner Babita gave a guarantee to the firm that the gross fee earned by her will be 25,000 rupees. See, it is given that these 25,000 rupees represent the average of the gross fee earned by her in the past 5 years. But what matters to us is that it is 25,000 rupees. Now, this gross fee refers to the total amount of money earned by a professional or partner before any expenses or deductions are made. It is the total revenue generated by the partner's work. In this case, it is Babita's work. It is not the net profit, it is what the partner bills or earns through their professional services. Here, Babita is a professional like a consultant or doctor or a lawyer. Before joining the firm, on average, she earned 25,000 rupees per year on her own. That was her gross fee. When she joined the partnership, she promised to bring in that same 25,000 rupees worth of professional work for the firm each year. That 25,000 rupees is the business she is expected to bring in. In other words, it is the value of her services. Babita committed to bring in 25,000 rupees worth of gross fees. But this year, the gross fee earned by Babita for the firm was only 16,000 rupees. Now, these 16,000 rupees are less than 25,000 rupees, right? So, clearly, there is a deficiency from the committed amount. Let's find out how much it is in the working notes. Let's first write the heading Babita's deficiency in meeting her guaranteed fee. Now, the committed earnings by Babita were 25,000 rupees. The actual earnings by Babita were 16,000 rupees. So, the deficiency in earnings is 25,000 rupees minus 16,000 rupees, which is equal to 9,000 rupees. So, Babita fell short by 9,000 rupees. Now, this is not a loss in the usual sense, but it does represent a shortfall in expected business. So, the question arises, who bears this 9,000 rupees deficiency? The firm or Babita herself? The partnership agreement states that this 9,000 rupees shortfall is Babita's responsibility. So, it is deducted from her capital account, not from firm's profit. Here, we have two things to notice. These 9,000 rupees do not represent income for the firm. It is simply an adjustment entry. It is not actual money the firm received, so it cannot be treated as profit. But to treat it fairly in accounting, we consider these 9,000 rupees as distributable profit and add it to the profit and loss appropriation account. Now, as we are deducting this amount from Babita's capital, we should debit the partner's capital account for Babita. And as we are adding this to the profit and loss appropriation account, we should create the profit and loss appropriation account. Now, the preparation of the partner's capital account is not in the scope of this problem. So, let us leave out the partner's capital account related debit entry and let's directly post the profit and loss appropriation account related credit entry into the profit and loss appropriation account. Let us first write by Babita's capital account in the particulars column on the credit side. Let us also write that this is deficiency of fee earned by her. Let us then write this deficiency amount in fee as 9,000 rupees. And with that, we have completed the posting of the credit entry related to the deficiency in the fees earned by the partner Babita into the profit and loss appropriation account. Now, as there are no other appropriations to be considered, let's proceed to calculate the total distributable profit and then distribute it. Now, there are no other entries on the debit side and the total on the credit side is 84,000 rupees. Now, as there are no other entries on the debit side, this total on the credit side is the total distributable profit and should be distributed among the partners. But the question is, in what ratio? Now, it is given in the problem that the partners share their profit in the ratio 3:2:1. Let us now calculate the share of the net profit for each partner as per this ratio. Before we proceed with the calculation, there is one thing worth noticing here. It is given that the partner Sona's share of profit is guaranteed to be not less than 15,000 rupees. It can be more than 15,000 rupees, but it should not be less than 15,000 rupees. This means that if there is any deficiency in Sona's share in profit, then it should be borne by the other two partners, Amit and Babita. So, in the working notes section, let's first write the header profit share as per the profit sharing ratio. Now, the profit share of the partner Amit is equal to the total distributable profit amount of 84,000 rupees multiplied with his profit sharing ratio 3/6. Cancelling with 6, 6 ones are 6, 14,000 are. Now, if we multiply the remaining 14,000 rupees and 3, we get 42,000 rupees. This is the share of profit for the partner Amit. Now, the profit share of the partner Babita is equal to the total distributable profit amount of 84,000 rupees multiplied with her profit sharing ratio 2/6. Cancelling with 6, 6 ones are 6, 14,000 are. Now, if we multiply the remaining 14,000 rupees and 2, we get 28,000 rupees. This is the share of profit for the partner Babita. Now, the profit share of the partner Sona is equal to the total distributable profit amount of 84,000 rupees multiplied with her profit sharing ratio 1/6. Cancelling with 6, 6 ones are 6, 14,000 are. The resulting value of this calculation is 14,000 rupees. This is the share of profit for the partner Sona. But it is given in the problem that the partner Sona should get a guaranteed profit amount of 15,000 rupees. But as per the profit sharing ratio, we are getting her share of profit as 14,000 rupees. Now, this 14,000 rupees is less than 15,000 rupees, right? So, we need to find the difference and adjust it from the share of profit of other partners. In other words, we will reduce the other partner's share of profit and adjust that amount to Sona's share of profit so that Sona would get the guaranteed profit amount of 15,000 rupees. By the way, we call this difference in the profit share amount as deficiency. So the deficiency of Sona's profit share is her guaranteed profit amount of 15,000 rupees minus her calculated profit share as per the profit sharing ratio, which is 14,000 rupees. Subtracting, we get 1,000 rupees. So this deficiency should be adjusted from other partner's profit amount. The question is, by how much we should adjust from each partner? It should be in the proportion to their profit sharing ratio. In other words, in the ratio of 3:2. So partners Amit and Babita should contribute to these 1000 rupees in the ratio of 3:2. Now the contribution by the partner Amit is equal to the deficiency amount of 1000 rupees multiplied with his deficiency sharing ratio of 3/5. Note here that this denominator is 3 plus 2 equal to 5. It is not 6. Note this point. Now cancelling with 5, 5 ones are 5, 200s are. Now if we multiply 200 rupees and 3, we get 600 rupees. This is the contribution by the partner Amit to the deficiency in the partner Sona's profit amount. Now the contribution by the partner Babita is equal to the deficiency amount of 1000 rupees multiplied with her deficiency sharing ratio of 2/5. Now cancelling with 5, 5 ones are 5, 200s are. Now if we multiply 200 rupees and 2, we get 400 rupees. This is the contribution by the partner Babita to the deficiency in the partner Sona's profit amount. Considering these contributions, let's now find how much is the actual profit share of each of the partners. Now the actual profit share of the partner Amit is equal to his share of profit as per the profit sharing ratio, which is 42,000 rupees, minus his contribution to the partner Sona's profit share deficiency, which is equal to 600 rupees. Subtracting, we get 41,400 rupees. Now the actual profit share of the partner Babita is equal to her share of profit as per the profit sharing ratio, which is 28,000 rupees, minus her contribution to the partner Sona's profit share deficiency, which is equal to 400 rupees. Subtracting, we get 27,600 rupees. And finally, the share of profit of the partner Sona will be equal to her guaranteed profit amount of 15,000 rupees. Now, for posting these profits, we should debit the profit and loss appropriation account and create the partner's capital account individually for each partner. Now, the preparation of the partner's capital account is not in the scope of this problem. So, let's leave out the partner's capital account related credit entry and let's directly post the profit and loss appropriation account related debit entry into the profit and loss appropriation account. Let's first write the subheader profit transferred in the particulars column on the debit side. Let's then write to Amit's capital account. Let's then write partner Amit's share in profit calculated as per the profit sharing ratio, which is 42,000 rupees. From this, let us lessen his contribution to the partner Sona's profit share deficiency from guaranteed amount. This is 600 rupees. Now from 42,000 rupees, if we subtract 600 rupees, we get 41,400 rupees. Let's write this amount in the amount column. Let's then write to Babita's capital account. Let's then write partner Babita's share in profit calculated as per the profit sharing ratio, which is 28,000 rupees. From this, let us lessen her contribution to the partner Sona's profit share deficiency from guaranteed amount. This is 400 rupees. Now from 28,000 rupees, if we subtract 400 rupees, we get 27,600 rupees. Let's write this amount in the amount column. Let's then write to Sona's capital account. Let's then write partner Sona's share in profit calculated as per the profit sharing ratio, which is 14,000 rupees. To this, let's add the deficiencies received from the other partners. Now the contribution to this deficiency by the partner Amit is 600 rupees. The contribution to this deficiency by the partner Babita is 400 rupees. Now to 14,000 rupees, if we add 600 rupees and 400 rupees, we get 15,000 rupees. Let's write this amount in the amount column. Now the total on the debit side of the profit and loss appropriation account is 84,000 rupees. Similarly, the total on the credit side of the profit and loss appropriation account is also 84,000 rupees. So the profit and loss appropriation account is balanced. With that, we have come to the end of the solution to this problem. Thanks for watching. Edixit.com is started to promote effective and efficient learning process to help the students with their learning requirements. To watch all our videos, please subscribe to our channel. Also, please click on the bell icon to receive a notification as soon as a new video is published. Please click on the like button if you like this video. Thanks for watching.